So today I will be discussing about Fast 29 about hyperinflationary economy. So before we start the discussion of the relevant rules and recognition basis, let's first discuss the general reporting rules. So what are those indicators of hyperinflation? So the main indicator of hyperinflation or when an economy is in hyperinflation is that there is 3-year cumulative inflation near or over 100%. Another one is that the wealth is kept in non-monetary assets. So the general population prefers to keep its wealth in non-monetary assets. Another is prices is linked to price index. So actually, one of the main important recognition of FAST 29 is the use of price index, which we will be discuss later. Another is the comparatives between restated to current end of period unit and the relevant disclosures. First, the relevant disclosures involve fact of restatement for purchasing power changes, counting approach between historical and current costs, and the GPI identity level and movement. So under PAS 29, hyperinflationary reporting or hyperinflationary economy, there are two relevant methods used. First is the constant accounting method, and next is the current cost accounting. So first, let's discuss with constant peso accounting. So under constant peso accounting, it sorts monetary items and non-monetary items. So what happens with monetary items? Accordingly, monetary items are not restated. In contrast, non-monetary items are restated using the gross or using the general price index, I mean. In relation to SFP restatement rules, non-monetary items at cost apply general price index from acquisition date, and non-monetary items initially measured at fair value for NRV has this important rule that FV or NRV was determined at a date other than the end of the current reporting period. So this is the exception. So the general rule is that if measured at FV or NRV, it is restated. So the exception is that no restatement if it is at year end. Under equity, restate from contribution or the origin date retained earnings is derived the balancing figure. So when you finally have restated the assets, less liabilities, and other present shareholders' equity items, you can arrive with the balancing figure, which is the retained earnings. Another important take note is that revaluation surplus is being eliminated. Under comprehensive income restatement rules, all items is restated from transaction dates. And if it is more practicable to use average index, it is used when it is more practicable. Gain or loss on net monetary position is recorded at P&L. Now let's proceed with current cost accounting. So current cost accounting basically deals with current replacement costs or the cost to acquire a similar asset at current purchase price. So the very essence of current cost accounting is the recognition of holding gain or holding loss. So when do we get holding gain or holding loss? It is the variance between replacement cost and historical cost. So current cost accounting revolves around these two items, replacement cost and historical cost. And their difference defines if there is holding gain or holding loss. Under SFP measurement, items at current cost is not restated, while other items are restated via KS 99 procedures. So comprehensive income measurement reports costs current at event time and restatement amounts restated to year end gross general price index. So again, let me just reiterate that in current cost accounting, it revolves around holding gain or holding loss based on the replacement cost and historical cost present. I think that would be all. Thank you very much for listening.